It's 1:30 p.m. in Lagos, 12:30 p.m. in London, and in Accra, Ghana. We're bringing you markets analysis and insights right here on Business Incorporated from Channels Television. Here's what's coming up on the program. Nigeria's President Bola Tinubu arrives Riyadh for Saudi Africa Summit. Dollar crisis spurs Malawi to devalue its currency by 44%. And the bulls still rare as Kenyan equities continue to plunge. Hello and welcome to the program. I'm Will Ibang. Let's start off with the markets, and we always go to the major equities here in Africa. At intraday, major equities were trading mostly negative. We see Nigeria down now, profit taking setting in there 0.13%. South Africa also down 0.22%. And let's look at Egypt, how the EGX 30 performed at intraday. Wow, what a jump, 1.89% at intraday, while Nairobi closed Wednesday's session in the green, up more than 1%. But we see that in Nairobi's session, despite this, the stocks are finding it hard to shake off their unwanted status as the world's worst performers this year. The Nairobi's all-share index has slumped 32% in 2023, the most among 92 global benchmarks. That's made the stock the cheapest they've ever been compared with broader emerging markets, yet there are few takers for that stock. And now let's talk to Steve Ogutu, who's an economist in Nairobi, Kenya. He joins us right from that city. Steve, it's good to have you, but why investors avoiding Kenya stocks?
Good afternoon, Will. It's always a pleasure to be here with you. And like you correctly put it, things haven't been that good in the Kenyan market. Just the past 7 days alone, the market has declined by about 3.5%. And this can be attributed to a number of factors, including the current increase in taxation. The current president, when he was campaigning and when he ascended to power, his agenda has been to cut on borrowing and expanding taxation here in Kenya, So that has been his approach. And what that means is, therefore, businesses have to be overtaxed, and that somehow strains businesses and investors. And as a result of that, and of course, a myriad of other factors, we are seeing that hit that the market is facing.
So this is possibly going to go on for some time, because it's been going on for some time now. And I don't know how this is linked, but reports are coming in, and we've heard calls for the resignation of President William Ruto. But are there current clamoring from the masses? And if so, why is that?
Right, there is. Things have been a bit tough. If you talk to Kenyans here, things haven't been easy. And it's because if you look at fuel, for example, which is a major driver of the Kenya's economy, it has been hiking nearly every month because the body in charge with the regulatory body that handles energy reviews prices every other month. And it's been on the increase. Early this year, toward the end of last year, the rates were about 170 shillings per liter for petrol. Now it's about 210 thereabout for petrol. And therefore, that means is prices in transport, in food commodities, all these have to go high. And that really impacts on the common citizen, especially the smallholder traders across the country.
We do hope things get better in Kenya, especially for the masses. We know that the cost of living is biting and everyone is really feeling that pinch. Thank you so much, Steve Ogutu, economist from Nairobi, Kenya, sharing your perspective on the program.
Have a good day. Cheers.
Now let's go to the NGX, where we're going to be looking at what's driving that stock. The profit taking there after the high we were expecting, 71K level, but I don't know if we're going to hit that. But Tajuddin Olayinka, CEO, Wyoming Capital and Partners, is going to give us that insight. Okay, right now we're going to move on to other stories. I think Tajuddin is not available to give us that update, but we'll just come back to that when it's ready. But let's see what's happening in the Middle East there. Middle East markets, the bear is still reigning, it's still the champion at intraday today. We're looking at Abu Dhabi down 0.27%. Now see that on the screen there. Dubai also down 0.65%. Elsewhere, let's see if Saudi and Qatari indexes performed any better. No, at intraday, 0.94%, and Qatari index down 0.61%. Now to the EU. Now, German farmer and agricultural giant Bayer has laid out some pretty weak numbers for the past quarter. Lars Alter there is with Deutsche Welle. He's going to join us and give us the updates and latest from that company. Lars, what was in that Bayer report? And can you tell us about the company's current situation?
Yeah, hi, Will. Thanks for having me. Well, it doesn't look good there right now, that's for sure. And investors didn't like what they heard from Bayer. The company's revenue fell by 8% to just over 10 billion euros, partially on weak sales for its glyphosate weed killers. Bayer's profit is down 31% in this past quarter. And all in all, earnings are just a good amount less than what analysts had expected. Even worse, accounting write-offs, Bayer is looking at a 4.5 billion euro loss, and that definitely has people worried, Bayer's own management included.
What is Bayer's plan to get out of this crisis?
There are a few ideas floating around. One is drastic cuts on the management level. Bayer's CEO says there are too many levels of leadership in the company. He says, quote, between me and the company and the customers, there's 12 different layers, and that is too much. So, long story short, there will be cuts. But there's another big idea too. Bayer could be split up. It is unclear right now when and how exactly this would be done, but it's certainly a step that would make sense for the company and for investors looking for a winner. Bayer could spin off its consumer health sector, for example. That would be aspirin and many other well-known drugs. The sector contributes 12% to the company's revenue. And there is some interesting precedent here because Pfizer, GlaxoSmithKline and Johnson & Johnson have all split off their consumer health subsidiaries last year as well. There's also the drug prescription business, which is around 38% of the company. That could be split off. Or Bayer could divest the agriculture business. That would be around half the company. And it includes all sorts of seeds, fertilizers and weed killers, including Roundup. And that has been the one product that has brought Bayer down over the past 5 years, ever since they bought its maker Monsanto. Roundup is said to be carcinogenic, and there has been lawsuit after lawsuit, having cost the company more than $10 billion already. So if there is any kind of split, those subsidiaries that will be cut from the Monsanto dog, the rest of the company will likely prosper. They are currently undervalued compared to their competitors.
I don't know if investors are reacting to this, if the markets are reacting to this, but what are investors looking at today's markets?
Yeah, it's the Fed again. It feels like the US central bank is playing a bit of a game this week, and I'm not sure why. Recent data from the US job market looked a bit weak. So the general idea on Wall Street was that the Fed could be looking at lowering interest rates. Indeed, Wall Street is currently pricing in a 1/4 point drop as early as May. But then earlier this week, some Fed governors gave some statements that sounded a bit more hawkish, and suddenly it looked like the Fed could actually raise interest rates again. Everyone was waiting for a big speech by Fed Chief Jerome Powell, who then spoke indeed yesterday without actually ever mentioning monetary policy. Now, he'll speak again later today, so the waiting game continues, and it impacts not just Wall Street, but markets around the world, of course.
Thank you so much, Lars Alter, for that update. Now let's quickly go back to the NGX and see how that fared at intraday. What drove the market to go down? Tajuddin Olayinka is the CEO of Wyoming Capital and Partners is joining me this afternoon. Good afternoon, Tajuddin. It's good to have you on the show.
Yeah, good afternoon. It's my pleasure joining you.
And so we say in the markets now 0.13% down. What's driving the stocks? What are investors selling off or taking profit on?
Actually, market today is more of a market for retail players. We have seen penny stocks move the market, lead the gainers chart, and at the same time also losing the losers chart. What that tells you is that the instrumental investors who normally play in the let me just say the big segment of the market where you have high cap stocks are trying to play down on price movement. So we see bargain hunting and profit taking going on side by side within that segment of the market. But the small cap market or the small cap segment, so to say, where we have the penny stocks, are probably the one where these retail investors are playing their usual game to either take profit or to also take position on some of the stocks, because most of these stocks have not moved significantly as we have them in the banking stock. So clearly, investors are actually investing more in those big cap stocks, but they are not moving prices. But the ones that are moving prices are actually the largely retail stocks that we call penny stocks. Both gainers and losers. These stocks are the ones leading the market on both sides.
Can you give us some of the names of these stocks, the penny stocks that are moving the market at the moment? What are investors really interested in, and why?
Yeah, the penny stocks are actually SCOA Motors, SCOA PLC, Japan Gold, UPDC, ABC Transport. These are just few stocks that I can just quickly pick for you. And then on the loser start, we have E-Transport, we have Multiverse, we have TIP, and we have these are just largely penny stocks that are trading within 50 kobo or 30 kobo to 150 kobo range. So these are stocks that some retail investors, because they are the ones that can trade there. Institutional investors don't trade these stocks because they don't have liquidity, so they don't go near there. But you see them in banking stocks, you see them in cement, you see them in all these other big cap stocks. So today, market is dominated by retail investors or by those who are trading penny stocks, both on the gainer side and on the loser side. But the real investment, actual investment in the market, is going to banking stocks, cement, and telecom. All these stocks that institutional investors would normally like to take into their portfolio. So these are the stocks they are trading at the moment, but they are not moving prices, perhaps because they are trying to exercise some caution, knowing full well that if you look at what is happening in the fixed income space, there has been some uptick in yield there, and so that uptick in yield means that there will be some moderation in the equity market going forward. So in the next few days or so, we might see that kind of moderation in the equity space.
Well, let's shine the spotlight here on Japan Gold. Do you think it will be able to leave the league of penny stocks anytime soon, seeing the rate at which it is going and with its expansion plans? Do you see it moving away from that league in the near future?
Well, until they have been able to demonstrate the fact that they are there. I do not see their market capitalization get to that level, take them out of the, penny stock range at the moment, even with the possible offer that they are offering to the market. But of course, because when you are saying you are doing expansion, you are doing so because you want to upscale your capacity, you want to reposition your company. Yes, it will have some movement in terms of market capitalization or in terms of the capitalization of the company itself, but it will not really be so significant as to take it away from penny stock range.
Okay, so do you see the market, in one word, bullish or bearish, closing in the green or in the red? What are your thoughts?
Because the breadth is just slightly negative. What we have now is more of a balanced market. I don't want to say whether it is bullish or bearish, because the breadth is just slightly negative, just 21 by 23, and so when you have that kind of breadth, it's pointing in the direction that you might have a swing, or a quick change before the close of market. So it might close positive or close negative, but it will be almost flat. It won't be so significant as to disrupt the market.
So we're just going to keep an eye out and just see. It might be green, it might be red. We're just staying in the middle there. Thank you so much, Tajudeen Olayinka, CEO, Wyoming Capital and Partners, for joining us on Business Incorporated and sharing your insights.
Thank you. It's my pleasure.
Now, coming up, more updates from the commodities market space. And that's in a moment. To join us, stay with us. This is Business Incorporated. Welcome back. Now, we're going to be talking carbonated drinks in Nigeria. Now, a price of a carbonated drink has spiked. A price of a 50 cl carbonated drink has increased by about 25%. It's quite popular in Nigeria. No one can give up the bubbly. Now, from 200 naira to 250 naira within a year. Now, despite this, there's still heavy competition in the market. Miriam Ode, analyst with Financial Derivatives Company, joins me to give us, break this down for us and unpack what is happening here. Miriam, I know everyone can't, ignore the bubbly, the sparkly, and, the sparkling water. But what is responsible for this price increase for carbonated drinks? Or is it just consistent with the general increase in the price levels?
Good afternoon, Will. Thank you for having me. This increase that we're seeing in the price of carbonated drinks in Nigeria is not only because of the increase in the general price level of the country, but also because of industry-specific related factors like the elevated price of sugar, the global price of sugar in the market. And just this morning, the global price of sugar increased by 0.44% to trade at about $27 per pound. And this is important for companies or producers of soft drinks or carbonated drinks, because sugar makes up about 7 to 12% of the soft drink content. So an increase in its price will definitely affect production cost for manufacturers of soft drinks, and this is why we're seeing an increase in the price. But there's also the factor of increased demand. Like you mentioned, most people can't stay away from the bubbles, and this is due to the hot climate temperature in Nigeria, and also the rapid population growth, which is supporting its demand. So these two factors are causing the price of carbonated drinks in Nigeria to increase.
I know, Miriam, that there's a sugar tax, and which was, implemented, put in place by the federal government. But to what extent has the sugar tax affected the demand and production of carbonated beverages in Nigeria?
That's a very interesting question, Will. And to answer, I would like to mention that this sin tax, or sugar tax, has not really had a significant impact on the demand, especially for carbonated drinks, because in the same year that it was implemented, that's in 2022, we still saw a 58.1% increase in the sale of carbonated drinks. And you might ask why, and this is basically because of soft drinks or carbonated drinks manufacturer increasing their advertisement or a campaign investment so that it reaches more target market, and this would increase the demand. There was also the growth of e-commerce, which is increasing accessibility for consumers to the commodity and supporting the demand for the commodity. But interestingly, we're also seeing new and cheaper entrants who are going through the health-conscious route and adopting products like carbonated smoothies and soda water into their product line. So what this has done is to diversify the demand for carbonated drinks instead of reducing it. And it's really interesting to see.
So I do know, Miriam, thanks for that. But, carbonated drinks, the markets in Nigeria has really faced a lot of challenges over the years. And this includes rising production costs, supply chain disruptions, changing consumer preferences. However, we've also seen environmental, issues come to play here. Everybody's talking about how to make the environment better. And manufacturers, global manufacturers in the global market are now switching to, I think, 100% plant-based sourced bottles. But do you think it is feasible in Nigeria to adopt such? And what are the challenges and the barriers that could, prevent that from happening to stop this widespread adoption in the country?
Yes, like you said, plant-based bottles, which are made up from materials like corn, sugarcane, seaweed, are gaining more attention or gaining more traction in the global market. And in 2021, we saw companies like Coca-Cola adopt a 100% plant-based sourced bottles for the sale of its carbonated drinks. However, if Nigeria is to adopt this trend, it needs to completely restructure its production process, because remember that we are using more fossil fuel-based bottles or production processes instead of plant-based. And the challenges that comes with this is increased production costs, because this would incur more cost for manufacturers. And like you mentioned, manufacturers are already experiencing higher production costs at the moment. So they will most likely be discouraged from adopting these plant-based bottles. There's also the issue of the higher need for infrastructure, because like I said, we're switching from traditional fossil fuels to plant-based, and that's a huge switch, and it needs more infrastructure in the market. Let's not also forget the issue of insufficient resources, plant-based resources, because Nigeria loses about 40% of its total agricultural food production, which we could have even used for this shift for the plant-based bottles. But this is limited in Nigeria, and it could actually limit the adoption of plant-based bottles in the country. But with the sufficient intervention, or with sufficient intervention in this market, there's still hope for a greener Nigeria, or a greener process of producing bottles for soft drinks or carbonated drinks in the country.
Yes, Miriam, we do hope that we go green, especially, jettisoning the fossil fuels and, picking up the cleaner aspects of production, so that, the environment is clean, people are clean, people are happy, and, lower cost of production as well for manufacturers in the country. Thank you so much, Miriam Ode, Analyst, Financial Derivatives, for joining us on Business Incorporated.
Thank you for having me.
Now, moving on to other stories, where President Bola Tinubu has arrived Riyadh, Saudi Arabia, for the first Saudi-Africa summit, holding on Friday, November the 10th. According to the presidential spokesman, Ajuri Ngelale, the president will focus on Nigeria's commitment to attracting more foreign direct investment and expanding business partnerships. He adds that the visit would reinforce the administration's ongoing domestic economic reforms. Discussions at the Saudi Africa Summit will also revolve around supporting joint action, enhancing political coordination, and addressing regional security threats. Now we go to Malawi, where the central bank has devalued the kwacha in a step that leaves the currency worth 2/3 less than it was at the start of the year. A statement from the bank says the currency will be sold at auction 1,700 with effect from Thursday, that's today, compared with 1,180 29, which was previously sold at. The 44% devaluation is the fifth this year, and the central bank says the measure was taken to correct supply-demand imbalances and counter arbitrage opportunities that have arisen in the market. And that's it on Business Incorporated for today. Do join us tomorrow for another edition. I am Will Ibong. Thanks for watching.